Assalamu alaikum, good morning, and welcome to Keypoint's webinar on Bahrain's economic substance requirements. This is the fourth webinar in a series of webinars we've held this week. In the earlier ones, we discussed about Bahrain's VAT returns, updates from the National Bureau for Revenue, financial services, VAT implications, and COVID-19 measures. If you have missed any of those webinars, we will make them available to you shortly. Hi, I'm Ramanori, Senior Manager at Keypoint, offering a range of compliance and advisory services to clients in Bahrain and Saudi Arabia. I will be conducting this morning's webinar along with my colleague, Abdul Rahman Mucheri, who's an Assistant Manager in our tax team. We also have two panelists, Mubin Kadir, our Head of Tax, and Mark Campbell, one of our Senior VAT Managers. The webinar is expected to last for about 1 hour, including a Q&A session at the end. If you wish to ask a question, please feel free to enter in the Q&A box, and we will try our level best to answer as many questions as we possibly can. So the discussion points for today is, we will be talking about the OECD principles, which undermine the economic substance regulations that were published late in 2018 by Bahrain. We will show you a decision tree or a roadmap, which we encourage all businesses to have so as to assess if they fall into the rules. We will be looking into what is a relevant activity as defined in the regulations. There are two key substance tests that need to be met by all companies that fall under the rules. We will then be looking at compliance requirements, economic substance returns in terms of the information that is required to be submitted to the regulator, and filing deadlines. Finally, we're looking at consequences of non-compliance and some FAQs. Back in 2013, at the behest of the G20 group of nations, the Organization for Economic Cooperation Development initiated the BEPS project. So what is BEPS and why was it introduced? To put it simply, in today's age of globalization, multinational entities have found it increasingly easy and legally acceptable to shift or transfer their profits from a high tax jurisdiction to a low tax jurisdiction. This is found to be detrimental to governments, individuals, businesses, and society as a whole. So what this framework does is it has implemented 15 measures to improve collaboration and cooperation amongst the international governments by way of information sharing on M&E's activities, thereby tackling tax avoidance and aggressive planning structures or arrangements. You will see on the slide that there are 15 action points. However, for the purpose of this morning's webinar, we will be discussing action 5, harmful tax practices, that talks about economic substance.
There are three core principles underlying the BEPS project. The first principle is coherence. This principle aims to ensure that the differences in the tax and legal systems in different jurisdictions do not result in double taxation or double non-taxation, which basically means ensuring that income is taxed only once. The second principle, the principle of substance, revolves around ensuring that the allocation of profits in a multinational group reflects the distribution of the key value drivers of the business across jurisdictions. This is because it is logical to infer that the presence of a higher amount of capital, labor, and know-how in a certain jurisdiction would result in its earning a larger share of profits. However, although this outcome seems inevitable, Many times in the real world, MNEs are able to structure their group structure in such a way that a higher than anticipated portion of profits ends up in jurisdictions with minimal or no economic substance in terms of the existence of the business's key value drivers and resources. It is this principle of economic substance which is the topic of today's discussion. Now I'll take you through an example of how multinational entities frequently structure their affairs in a manner that is legal but which lacks economic substance, and for which the sole motive many times is just the avoidance of taxes. Suppose a company that is tax resident in Australia, a country with a 30% tax rate, incorporates an entity in Bahrain, which, as you know, has no corporate income tax. The Australian company would then transfer certain intellectual property assets to its Bahraini subsidiary. The Bahraini company would then periodically charge its Australian parent company with royalties in exchange for its right to use these transferred assets. In this example, the Australian company was able to legally shift taxable profits from Australia, a high tax jurisdiction, to Bahrain, a jurisdiction which has no tax. It is also clear that the sole motive of this arrangement is the avoidance of taxes and the minimization of the Australian company's worldwide tax obligations and liabilities. This type of legal arrangements is one of the main problems that international tax authorities are facing nowadays. And the BEPS project introduces a number of measures to restrict multinational MNEs from avoiding tax through these types of arrangements.
Abdul Rahman, I have a question for you. Say I am company B. Why would I be concerned, or for that matter, why would the NBR be concerned what the company is paying in Australia? What tax rate is the company paying in Australia?
So even though as a company incorporated in Bahrain, you do not have to pay any corporate income taxes on your income here because there is no taxation in Bahrain. However, it is likely that there will be increasing information sharing requirements between international tax authorities. And so it is possible, it is likely that the tax authority in Bahrain would communicate or inform the Australian tax authority about the presence of a subsidiary for a company that is incorporated in Australia. And this could even have ramifications for the Australian company in terms of the possibility of it having to pay tax on income which has been parked in Bahrain.
Okay, it's good to know that. Right, so I mentioned earlier that we will be talking a little bit about Action 5, harmful tax practices. What this action aims to do is to stop the practice whereby a jurisdiction invites a foreign multinational, an MNE, to invest in its country with minimum restrictions. In this manner, the MNE can park some of its worldwide profits in this low or no tax jurisdiction and reduce its worldwide tax liability. One thing to remember is that this action plan does not aim to force foreign governments to introduce or increase the rates of tax in their jurisdictions. However, it does encourage them to adopt an international standard whereby MNEs are required to allocate resources, both financial and human, in order to conduct business in their jurisdictions. This is one of the minimum standards which have to be adopted by all signatories to the BEPS project. To date, we believe there are over 135 countries around the world that have signed up, including Bahrain. Okay, so against that backdrop, in late 2018, the regulatory authority in Bahrain, namely the Ministry of Industry, Commerce and Tourism and the Central Bank of Bahrain, publish the economic substance rules and guidelines in order to provide guidance to businesses, both in the non-financial sector and the financial sector, to demonstrate, to show how they can demonstrate their economic substance. Another thing to note is that although these rules were published way back in 2018, the reporting year, the first reporting year is for the period ended 31st of December 19, so last year, and therefore the first return is required to be filed in 2020, the current year. You will also, just for your information, that in Appendix 2 of the guidelines, the ministry has released a template of the economic substance return. So please do have a look at it, because it explains what a company needs to do in order to substantiate its economic substance. And also for the financial sector, the CBB have also released their own version of this, of the economic substance return, which it has issued to all of its licensees. Right, so I guess this is a good starting point for all companies doing business in Bahrain. They need to assess if they fall under the ES rules. So I guess the starting point would be, does an entity carry out relevant activity? Now, we will be talking about what is relevant in the next slide. However, I can tell you what is not relevant, and that is if you're a Bahraini-based business, so for example, manufacturing, retail, property, hospitality, hospitals, or a mere service provider, if you are based in Bahrain and your operations are in Bahrain, you don't need to meet the rules. So there you can see that if an entity does not carry out a relevant activity, you're not subject to the ES rules. However, you are still required to notify the regulator, in this instance, the ministry, by filling about some basic questions about the entity, namely the name, commercial registration number, details of ownership, and the reporting year, and sign and submit the return. So it's not very onerous at all. However, let's move on. If you do actually conduct a relevant activity and you are part of a M&E group, so where the annual consolidated turnover in the previous financial year was more than $850 million US, then you are compliant, you are subject to the ES rules. But again here, if you have operations only in Bahrain, then once again, although you are required to meet the ES rules because you are conducting a relevant activity, you don't need to meet the substance tests. And again, we will come to that on the next slide. But very simply, the situation is pretty much the one above, whereby you fill in some basic questions. There's about 6 or 7 of them, and then you sign and you submit the return. Finally, if you are conducting a relevant activity and you have overseas operations, then simply you are subject to the ES rules and you need to meet the full ES requirements. Right.
In the previous slide, my colleague walked you through a decision tree, which all entities in Bahrain may use to determine whether or not they are subject to the economic substance regulations. The main issue which he discussed and went through in the prior slide is whether or not the entity conducts relevant activity. In this slide and the next one, I will take you through the list of activities that have been designated by the local authorities in Bahrain, basically the Ministry of Industry, Commerce and Tourism, as well as the Central Bank of Bahrain, the list of activities which have been designated as relevant activities in Bahrain. So in terms of the relevant activities that have been listed by the ministry, the first is distribution and service center activities, and this includes, this relates to both the sales of goods as well as services, but in terms of sales of goods, this relates to the purchase of goods from other group members and then reselling them either to local customers or to overseas customers, or the provision of services to group entities, where those services can be of an administrative or a managerial nature.
Just to give you an example of that, so for example, you could have a company based in Bahrain that has been contacted by a customer for a specific piece of machinery. Obviously, it doesn't have the machinery itself. It imports the machinery from one of its group members from outside of Bahrain and resells it to the customer. It could be a local customer or could be a customer based overseas. Following on from that, it may provide some after-sales services to the same customer. That would also be a relevant activity. Or when Abdul Rahman refers to managerial technical services, let's say that you have a group member residing in KSA that has an oil refinery, but you have the technical expertise, the consultants who can do the job in KSA. So therefore, what you do is you provide that service to your group member. That would also constitute a distribution and service center activity. And by the way, these activities are listed within the guidelines as core income generating activities. We will come to the definition of that in a little while, but basically what they are is principal business functions that drives profits and creates value.
The second relevant activity under the purview of the ministry is that of head office activities, which includes services such as taking management decisions on behalf of related group entities, incurring expenditure on their behalf and then possibly recharging these group entities, and more generally, simply coordinating the activities of the group.
Here, to give you an example, say head office based in Bahrain may have the senior executives based out here, but they might be presiding over board meetings of other group members. Or, for example, they might have coordinated a marketing campaign on behalf of the entire group, or, for example, where they have a central treasury function.
The third relevant activity is that of holding company activities, which mainly includes simply holding equity participations or ownership in other entities, and for which the holding company would be entitled to both dividend income as well as potentially any capital gains from the sale of these equity participations. Holding companies may also receive other forms of income, such as interest, rents, and royalties. The fourth relevant activity is leasing activities, and which simply entails a company leasing either a tangible or an intangible asset to another person in return for periodic payments.
Just to give you an example, this can be a little bit tricky in the sense that what is relevant is actually the activity of leasing that asset. So to give you an example, if you have a client that is leasing a vessel to, say, one of its group members for, say, marine or land reclamation work, then the relevant activity is the actual leasing of the vessel. The activity of the leasee, that is the other company, that is not actually relevant for the purposes of ESR. So you need to have that distinction that the activities of the lessor may be relevant, but the activities of the leasee may not be relevant. The leasee would itself have to review what it is doing in order to assess if it falls under the ESR rules.
The next relevant activity is that of shipping activities, and which involve either the transport of passengers or cargo through international waters, or the maintenance or rental of equipment that is used within sea transport. And the last relevant activity under the purview of the ministry is that of intellectual property activities, and which includes the development, management, and/or exploitation of intellectual property assets in order for the entity to generate income. And this can be done either through the sale of any developed IP assets or the lease of these IP assets for payments frequently known as royalties.
Okay, let me give you an example of this. So very simply, you have a company based in Bahrain that has the GCC-wide rights to McDonald's, for example. So what it does do, it actually sub-licenses that right to its group members across the GCC, say the Middle East, North Africa, and it charges them a franchise fee. That would be a relevant core business activity falling under IP. It may also provide other services such as marketing and other administrative, and other marketing support, which will also come under this activity. Just one point on here is that if the IP was acquired by a related party, acquired from a related party, or was acquired by some sort of a cost-sharing arrangement, then the ministry's default position is that the entity is not compliant with the ES rules. So what the company would need to do to demonstrate compliance would be to show that it has control on the use of the IP. And that can be demonstrated by drawing up detailed business plans of the intention of the company in Bahrain to use or exploit that IP, and also presence of senior executives or management who are in charge of taking such decisions.
The relevant activities for CBB licensees include the activities that are conducted by banks, finance companies, insurance firms, investment businesses, and fund administrators. And the reason that these specific activities are listed as relevant activities, as well as those which we have discussed in the prior slide, which are under the purview of the ministry, is that these activities are generally geographically mobile, which means that corporations, especially multinational groups, they can shift them from one jurisdiction to another, as in relocate them to another jurisdiction with relative ease, especially when compared to other types of activities, such as manufacturing activities or retailing activities, where an entity would need to have substantial resources on the ground before engaging in economic activity in any particular jurisdiction. And one last point that all entities must keep in mind is that when they seek to assess whether or not they are carrying out a relevant activity, they must ensure that they look into both the activities that are listed on their commercial registration, as well as the activities that they actually carried out in any particular financial year.
This is an extremely critical point, and we get asked this question a lot from our clients. I think this is best illustrated by giving you a couple of examples of how ESR can impact such companies. So, for example, we have a client, a bank, who historically had a number of special purpose vehicles. Some were holding property, some were leasing property, some were holding investments. There were others doing different activities, which are all listed under the CR, but were not required to comply with any rules or provide any or submit any returns. However, since the introduction of ESR, this has made the banks think as to regards the structure, because such SPVs now are conducting certain activities. For example, leasing is an example, and investment is another example, where such activities would be considered relevant from EER's point of view, and then you are required to meet the substance test, which we will be discussing in the next slide. But to briefly explain that, you need to have a presence, premises, employees, and in some cases, board meetings have to be held. But SPVs would have traditionally been managed from by the bank themselves, so they wouldn't have any commercial substance of their own. So, and that is one way, that is an example of how it will impact such businesses going forward. One more example is, so we have a client, which is a rather large telecommunication company, resident outside of Bahrain, but within the GCC. Historically, it has had a number of holding companies based in Bahrain, again, with little or no commercial substance. But again, as discussed previously, holding company activities are relevant, and therefore, again, they need to meet the rules and comply with the compliance requirements. Now, one thing to remember is that these structures are perfectly legal. They would have probably had a commercial reason for it. Maybe it was easy to set up companies in Bahrain in the years gone by. However, ESR has now completely changed the landscape and has forced such businesses to revisit the structure they have in place. Right, so we now move on to, we've discussed what is a relevant activity. Now we're going to discuss about the two key substance tests that need to be met. So number one is the core income generating activities. You may also call them as income producing activities. But basically, they are defined as principal business functions that are profit drivers and create value for a business. And what the regulations say is that in order to be compliant, companies in Bahrain need to undertake such activities within Bahrain. And the way to do that is by having sufficient resources in terms of, from a financial perspective, so an adequate amount of operating expenditure. You need to have human resources, so an adequate level of employees who are working and resident in Bahrain, and also an adequate office in terms of size and location in order to conduct that principal business activity inside of Bahrain. We move on to the second key test, and this is, in our opinion, the harder test to meet, the management and control test. So I would like to first state that what this test is not saying is that companies need to move their management structure overnight from, say, the UAE to Bahrain. What it's saying is that the entities will now have to be managed and directed from Bahrain, and that can be done by having a majority of the board meetings in Bahrain. So for example, if you have, say, 5 or 6 board meetings, say 5 board meetings a year, you could have 3 inside of Bahrain and 2 outside. That's perfectly fine. There's no guideline as to what is the frequency of these. You could have them quarterly, half-yearly, bi-monthly. It really depends upon the complexity of the business, the structure, and it's really for the individual business to decide as regards how often do they need to hold these meetings. The meetings must have a quorum of directors physically present. To give you an example, say if you've got 3 directors, 2 can be present, physically present at those meetings in Bahrain, and the other one can join remotely. I mean, we do, obviously, times in these challenging times, you may find the ministry taking a more lenient view, and you may be able to do a video conference. But in the normal course of things, you are required to have a quorum of directors present at those meetings. The expectation is that at these meetings, key strategic business decisions relating to the Bahraini business would be taken. So, and should be recorded. So, for example, if you're a branch, you may think, well, you know, if the head office is, say, in the UK, and you just have a branch in Bahrain, if it falls within the ES rules, you are still required to have board meetings in Bahrain in relation to your activities in Bahrain. And as I said, it doesn't have to be that you have to have all the meetings, but you do have to have a majority. Second last point is that you need to maintain an agenda. You maintain the agenda and the minutes of those meetings in Bahrain, because if you look at the ES return, when you are submitting the return, you're required to provide copies of the agenda or the minutes. One final point on this one is that the regulations do state that it is not necessary for the board members to be actually holding those meetings. So you could have a partner, or which could be a regional or a country head, who could actually, or even a manager who has the authority to hold a meeting and take the decisions. And that might be useful for a situation where you have a branch of an overseas business residing in Bahrain. One thing the regulations have stated is that your core business activities can be outsourced to a third-party service provider if you do not have adequate resources yourself. However, there are some strict conditions attached to it. Number one, the outsourcing party must have adequate resources in order to conduct that activity. Simply because the adequacy, and we will come to the definition of adequacy in the next slide, but basically, if the service provider has allocated enough resources to conduct that activity, by default, the company has complied with that test, with the resources test. That's right. The other thing, the couple of other things are the outsourcing activity must be undertaken inside Bahrain, and the company itself must be able to demonstrate adequate supervision of the outsourced activity. There is no guidelines, well, rather the regulations do not specifically state that the activities must be supervised in Bahrain. A couple of points here. Firstly, this may work for some businesses, but not for others. It really depends upon the activities being undertaken. So if you are a holding company activity and you have investments, you can probably outsource it to a fund manager or a trust where they have the requisite experience, expertise, and the resources to effectively manage the investment fund for you. On the other hand, if, for example, you are providing services, so in my previous example where you're providing some consultants to work in an oil refinery in KSA, you may not be able to outsource that, or that would probably not be practical. You will probably have to do that yourself. So it's really just an option available to businesses. They don't have to necessarily adopt it. It really has to be depending upon the activity they undertake. And one final point, I did mention at the start of the slide that this is a pretty hard test to meet. And the reason is that this management and control function cannot be outsourced. So whereas your core business activities can, this cannot. So these rules have to be abided for. And the trouble that a lot of businesses in Bahrain are having at the moment is that the management structure is currently outside, and even for them to organize board meetings and for directors to visit and have meetings, is going to take them some degree of time. You will note that in the previous slides, I spoke about adequacy on a number of occasions when I was referring to frequency of board meetings, employees, premises, financial resources, and so on. This term has not been defined within the guidelines, so I guess you would take the literal view that adequate is what is satisfactory or what is sufficient to achieve a certain purpose. So in this instance, businesses, it's up to the businesses to ascertain what is adequate based upon the size, nature, and the level of activity. There is no right or wrong answer here. As long as the company can demonstrate and justify that it has adequate resources, it should be fine. So just a little small example, if you are an investment company, you could have, you would probably need a small office with maybe 1 or 2 desks and maybe 1 or 2 people, and that would probably be sufficient. Whereas if you were an IP business and you were providing marketing support and management services, then you may need a larger office with more employees.
Just to recap, basically, to summarize the tests that are required to be met. Let's say that you went through the prior decision tree, which we had laid out, and you determined that your entity is carrying out a relevant activity and needs to meet the economic substance tests in Bahrain. So just to summarize what these tests are and what exactly which requirements you must meet. First of all, as we discussed earlier, you must ensure that you are carrying out your core income generating activities in Bahrain through using an adequate number of full-time employees which are resident in Bahrain. That is first. You must also be having an adequate amount of operating expenditure in Bahrain. And finally, you must have adequate office premises in proportion to the size and complexity of your business model. The second substance test, as my colleague discussed earlier, is that you must ensure that your company is managed and directed in Bahrain. And this is mainly through ensuring that you have a sufficient number, or the majority of your board meetings are held in Bahrain at adequate and sufficient frequencies, and where a quorum of directors is present. And finally, you must ensure that you record the minutes of those meetings that take place, and that you hold both these meeting minutes as well as the meeting agenda in Bahrain. Now I'll go through the additional compliance requirements for entities subject to the economic substance rules in Bahrain. The economic substance rules in Bahrain also require all entities which are carrying out a relevant activity to meet the following requirements. First, they must ensure that they have in place policies and controls for the management of their operations, compliance, governance, and risk. They must ensure that they have adequate accounting records that meet international financial reporting standards. All relevant entities must ensure that they indicate both their name and their commercial registration number on all business documents that they issue, as well as on their website where they have one. And finally, all relevant entities must ensure that they obtain approval from the relevant regulator prior to establishing an office outside Bahrain, changing any of their existing shareholders, appointing or changing any of their current board of directors, appointing an external auditor, and finally, where they would be changing their bylaws, memorandum, or articles of association. Now I'll walk you through some details on the economic substance return that all entities in Bahrain must submit. So all entities in Bahrain must file an economic substance return every year. And the deadline for filing that is 3 months after the end of an entity's financial year. Entities which are part of the non-financial sector and therefore are under the purview of the ministry must make the submission to the Ministry of Industry, Commerce and Tourism, and this is most likely to be done through the Sigillat portal online. However, we know that this is currently not yet operational, but we expect it to be up and running soon. As for licensees of the Central Bank of Bahrain, they must submit their economic substance return directly to the CBB. The information that needs to be provided can be mainly summarized into the following sections. The first section includes the details of the entity which is filing the return, as well as details on the entity's ultimate parent company or ultimate beneficial owners. The second section includes a list of questions which basically require the company to confirm that it is conducting its activities in Bahrain with an adequate amount of resources, basically the people, premises, and operating expenditure adequacy test. The following section includes a list of questions where the entity is required to confirm that it is managed and directed in Bahrain, that it holds a sufficient number of board meetings with a quorum of directors present in Bahrain, and that the meeting minutes are recorded along with the meeting agenda, and both of these are available and held in Bahrain. And finally, the entity must confirm that it is in compliance with all other regulatory requirements as defined in the CEB rulebook, if we're talking about CEB licenses, or the ministerial order for entities within the non-financial sector.
I would just like to add a couple of things here. So when we say within 3 months of the end of the financial year, the first reporting year will be for the calendar year ended December 19, and therefore the deadline was to be 31st March 20, but there has been an extension granted, and I will ask Abdul Rahman to explain that a bit more in detail. But the other important point that I wanted to highlight is that if we go back to our decision tree where we said that if an entity is not conducting a relevant activity, or is conducting a relevant activity but is only based in Bahrain, then pretty much in terms of the return information that's required to be submitted is bullet point 1. So you're required to basically provide the company details and information about the ultimate beneficiary, and the rest of the remaining sections of the form would not apply.
In terms of the deadline for filing the economic substance return, as we mentioned earlier, the deadline is within 3 months of the end of an entity's financial year, and so for the majority of entities in Bahrain whose financial year, latest financial year ended on 31 December 2019, they were required to make the submission on the 31st of March 2020. However, due to the disruption caused by coronavirus, both in Bahrain as well as globally, the ministry has decided to grant all entities under its purview an extension of the deadline for filing the economic substance return by 3 months. So for all of those entities who were supposed to submit their returns to the ministry by the 31st of March 2020, the deadline for them to file their return has now been pushed to the 30th of June 2020. However, this postponement was not granted to the CBB by CEB licensees and who were supposed to make the submission of their economic substance return to the CEB itself. But from what we heard, we understand that for any CEB licensees who were having trouble filing their return prior to the deadline, if they had asked the CEB, if they had requested for an extension, the CEB is likely to have granted them. Now, in order to ensure that businesses in Bahrain comply with the economic substance tests and requirements of carrying out their core income activities in Bahrain and of being managed and directed in Bahrain, as well as of filing the economic substance return prior to the deadline, the ministry has indicated that it may impose one or more of the following penalties on entities that violate the economic substance rules in Bahrain. These penalties range from providing first a warning notice to the violating entity, the suspension of the CR of the company violating any of the compliance rules, striking off the company from the commercial register, the imposition of financial penalties, and finally, even criminal prosecution.
Abdurrahman, a question for you here. In your opinion, how likely is it that the ministry would impose any penalties if the client is not compliant with the ES rules for 2019?
So based on a clarification from the ministry itself, even within the guidelines which it has issued, I believe our current understanding is that the majority of these penalties are very likely to be reserved mainly for those entities which both have failed to comply and do not seem to be taking active steps in trying to rectify their situation. So my understanding is that the majority of companies, as long as they are seen to be actively trying to correct any non-compliance, I do not believe that they would be subject to the majority of these penalties.
So I guess what you're saying is if they take any steps towards compliance, then they should be fine. Can you give us an example of maybe a couple of steps which may to demonstrate their intention to comply?
Correct. So let's assume you have a company which is carrying out a relevant activity and needs to meet the economic substance tests in Bahrain. However, let's assume that its non-compliance lies in the fact that it currently does not carry out any of its core income generating activities in Bahrain, in the sense that it does not have any employees on the ground in Bahrain. Okay, so in this case, even though this entity is clearly in violation of the compliance requirements for the economic substance regulations, it is likely that the ministry would not be quick in penalizing such an entity if this entity were to, say, introduce a clear business plan with timelines and a business plan which it aims to adhere to that shows how the entity would be trying to take steps towards compliance.
Great. All right, so this is our last slide before we go on to the Q&A section, some FAQs. So Abdurrahman, question number one for you. An entity with a Bahrain CR carries out relevant activities only in Bahrain and only has local customers. Is the entity subject to the ES regulations?
So since this entity carries out a relevant activity, it is subject to the economic substance regulations. However, because it only has local customers and is not part of a multinational group, in that case, it would only need to notify the ministry of its status and that it only has local customers and activities, and would therefore need to submit a very short filing of the economic substance return.
Next question to you. If a Bahrain-based entity is part of a multinational group but has no overseas activities, is it subject to the regulations?
In this case, even though this entity does not have any overseas activities, because it is part of a multinational group whose combined group turnover exceeds the stipulated threshold of $850 million, yes, this entity would need to meet the substance tests and file the economic substance return.
Okay. Next question. The activities listed on an entity CR doesn't include any of the activities highlighted by the ministry. Is the entity subject to the regulations?
So if an entity does not carry out one of the relevant activities, which we highlighted earlier, either under the purview of the ministry or under that of the CBP, which are the activities that CB licensees carry out. In that case, it would not be subject to the economic substance regulations. However, as we discussed earlier, all entities must ensure that they also look into the activities that they are actually carrying out and which may not be listed on their commercial registration before concluding that they are not subject to the economic substance regulations in Bahrain.
Great.
Let me ask you the following question, Rahman. Let's assume an entity is under liquidation but continues to undertake a relevant activity. Would it be subject to the economic substance regulations in Bahrain?
Well, the CBP has given clarification that if an entity is under liquidation but carries on a relevant activity, howsoever small or limited, it is still required to meet the substance tests and file the ES return. We haven't had that clarification from the ministry as yet. We've asked the question and we're waiting for their response.
The following question is something which we already highlighted a number of times, but we just wanted to really make clear to all our attendees. Rahman, are all entities with a commercial registration in Bahrain required to file an economic substance return?
Yes, that's right. All entities that have Bahrain-based businesses that have a CR are required to file an ES return. If they do not conduct a relevant activity, as we have already stated, they will have to file a very short, simple ES return. However, if they are undertaking a relevant activity, then they will need to meet the full requirements.
If an entity outsources its core income generating activities to a third party which is resident in Bahrain, would that entity still need to meet the resource adequacy test in terms of having an adequate or sufficient number of full-time employees in Bahrain, having adequate offices in Bahrain, as well as operating expenditure?
No, as long as the service provider has allocated substantial resources, basically as long as they have allocated sufficient resources, by default, the company itself is compliant with that test.
So basically, for entities which outsource their core income generating activities to a third-party service provider in Bahrain, the ministry will actually look to the adequacy of the resources that are utilized by that service provider in determining whether the entity which decided to outsource meets the resource adequacy test.
Yes, exactly. It will, the adequacy of the service provider will count towards the adequacy of the company itself. Final question for you, Abdul Rahman. Do the employees and board members of an entity subject to Bahrain's ES rules need to be resident in Bahrain?
So if an entity is subject to the economic substance rules in Bahrain, it needs to have full-time employees which are resident in Bahrain. However, the residency requirement is not applicable to the board members. As like we said earlier, the board members, the majority of board members only need to be present in Bahrain, physically present for when board meetings take place.
Great, excellent. Before we move on to our Q&A, just one final thought is that these rules have been introduced not to unduly burden local businesses in Bahrain. In fact, they don't really apply to Bahrain-based business. They're more geared towards MNEs who are present in Bahrain, conducting, shifting profits from, say, a tax jurisdiction to a no tax jurisdiction without having a commercial substance. And with that, we move on to our Q&A, and Mubin.
Thank you, Rahman and Rahman. Look, I think we've had a lot of questions. Actually managed to answer most of them given how we were going for time. So there were about 18 questions, all of which I've answered. There's one question I thought I'd leave it till the end, which was, is the filing the return open by the ministry? So I'm assuming the question being asked is, can businesses or entities lodge the return through Sigilat? I'll leave you to, I know what the answer is, but I'll leave it for you guys to answer the question.
Sure. Well, at the moment, the ministry hasn't uploaded the return on Sigilat. So until that happens, unfortunately, you cannot file the return. The ministry has obviously granted an extension of 3 months, but we would recommend that the clients would look at assessing whether they are compliant with whether they fall under the ES rules, and if they do, they need to look at how they're going to comply with the substance test. And if obviously they need to look at maybe outsourcing or put into place arrangement whereby they can have board meetings. Now is the time for them to act in advance of the filing of the return, which I said will be done most likely online, although that facility is not available.
So, well, that's all the questions we had. There's one more question that's popped up. Have other companies been submitting returns? Well, I mean, I can answer that. As far as we're aware, none of our clients have submitted the return. So we've prepared a lot of ES returns for our clients, but we have not yet submitted them because we were about to actually submit them on the second last day, but because we received that extension, we've held off on submitting them and waiting for the Sigilat portal to be opened. Look, we've got a few minutes to go, but unless there's any more questions, I think we can end it there. So thank you everyone for joining us, and thanks to the presenters, and have a nice day. Thank you.
Thank you. Stay safe and have a good weekend.